Good morning, everyone, and welcome to the PivotBoss pre-market video for Thursday, November 7th, 2024. I'm Frank Ochoa, aka PivotBoss. Happy Thursday, everyone. It is Fed Thursday. The Fed is on deck for today. We get ourselves another Fed statement and a rate cut decision. Right now, 25 basis points rate cut is currently being priced into the market. We'll see if we do get that later on this afternoon. At 1:30 p.m. Central, we'll also get the Fed press conference to follow. So we could be looking at quite a bit of range-bound price action early in the day, a bit of a holding pattern here after such huge gains on Wednesday following the Trump presidential victory there. And we could be looking at an increase of volatility later on this afternoon and into Friday's trade as well. So right now, very narrow range of price action, just 26 points of range right now for the ES. The ES finished the previous session with 152.25 points of range. That was right alongside our expectations for the day. Heading into Wednesday's trade, we were looking for a 150-point day. We got 152.25 points. Today, we were looking for early overnight compression, especially ahead of Fed. And then we could see some increase in volatility later on in the session. Right now, very, very bullish overall, and not looking, even if we did fade into the previous session's range a bit here, not likely to be a selling opportunity. Instead, bulls looking to defend any pullback as this market remains quite bullish. Looking at the NQ, very similar price action here out of the NQ, very compressed price action here, 42% of ADR and a range right now of 137 points. Again, super high range day in the previous session, over 600 points of range for the NQ, and a push to new all-time highs today. Today reaching new all-time highs of 20,999.25, coming just 3 ticks shy of 21K. The previous high was the previous quarter's high there. That's at 20,983. So just pushing beyond that marker here today. New all-time highs, compression here ahead of Fed later on this afternoon. Still very bullish overall. Got to keep an eye on the previous quarter's high. At times that could be an opportunity for a modest fade, but we're still trending up. Still showing quite a bit of strength, especially following the presidential election, and still in a holding pattern here ahead of this afternoon's Fed. We'll see how that plays out later on this afternoon, but the expectation is for an increase of volatility in the latter couple of hours of the day, and especially Friday. Looking at crude oil, right now crude oil currently down about 0.25%. The previous session down 3% early, a big time turnaround from the lows of the day and a rally back up. Gave back some of the day's gains there, but finishing with a kind of a failed new low pattern inside day right now, and continuing to hold below the 72.40 level. We've talked about the significance of 72.40 being major resistance. We've known about this for the last several weeks, especially into the previous quarter here. That was the previous quarter's low, and it became support, took it offered, remained resistance, and then here this quarter 72.40 became the exact midpoint of the impulsive move, giving us a new key range. And right now that's been a very important area of resistance thus far. We're still in a bearish pattern of seasonality here for crude oil. Any rally could still be sold as of right now. But if there is a transition day through 72.40, that could open up a short-term burst to the upside back towards 76. But any rally, again, could be seen as a selling opportunity, especially during this bearish period of seasonality for crude oil. Right now, inside day, and likely to remain within the boundaries of the previous session's range. Strong low, strong high. We could see mostly range-bound action between those two extremes. Looking at gold futures right now, gold with a little bit of a bounce back day here. Extreme reversal, thrust reversal signals here, especially off the previous quarter's close. Gold with massive selling pressure in the previous session following the presidential election. It was a risk-on type of day, and that meant gold was down. So gold had been seen perhaps as a defensive play this entire time. Big time rally out of gold, a rally from 2,000 to 2,800 over the course of the last several months. But the previous session was clearly a risk-off trade here and some profit taking in gold. This market also took out the previous session or previous month's midpoint, and that broke kind of the upward sloping pattern of the higher value relationship on the pivot range. When that pattern breaks here, it could be an indication of, at the very least, some sideways price action, but at most here a bit more of a pullback, perhaps in the previous month's low price. So we could be looking at a further pullback up ahead, especially if price cannot reestablish acceptance above 27.10. So while we are getting a little bit of a fade after trend day here today, bears will be looking to keep 27.10 offered, and that could open up a return back toward 2600 rather, and 2620. 2600 is right near the previous FOMC key level from September 18th. That number is 2594.40. That's a naked FOMC key level there, so the market could be looking to return and fill that price up ahead. Looking at the YM right now, 156 points of range, barely a blip on the radar here, kind of a doji-like day at the moment. 156 points when yesterday finished the day with 1,549 points of range. 1,500 points of range is one of the largest days that we've seen in a very long time. A Marubozu type of bar here, a massive high range bar. You can see a G squat as well with the green coloration. It was a massive move to the upside, and overall this market likely to maintain those gains even if we fade back into the previous session's range a bit. Again, want to avoid selling into this strength right now. Instead, bulls will be looking to defend into pullbacks. Even right now we're seeing price take out the overnight low and quickly get bid back up. This could be a holding pattern, range bound, fade the edges with an upward bias ahead of this afternoon's Fed. Looking at Bitcoin. Bitcoin had a massive day in the previous session as well, up around 9% gain. Currently right now a little bit of a fade back, a little bit of a pullback, but it was new all-time highs. New all-time highs for Bitcoin in the previous session, 77,140. 77,000. That's a massive push, about 3,000 points beyond previous all-time highs. A huge high range day yesterday. That range bar yesterday was over 7,000 points, 74.95. So about 7,500 points of range yesterday alone. It took the 70,000 level bid, and this market has been moving in 10,000 point increments. So to take 70,000 bid, that means 80,000 is the next market structure level above. Additionally, one thing we've noted before is the large key range that is developed here. That key range projects up to 92,285. So this is a massive move right now for Bitcoin. Bitcoin miners had a huge day as well. CleanSpark, Riot, Marathon, Cypher, Hut 8, and others all had massive days, and that could continue to persist heading into the end of the year. Now, taking a look at Ethereum up right now over 4% and has pushed through the 2,800 market structure level as of today. The previous session also a super high range day here, massive G squat back toward 2,700. Today we're seeing a continuation of that strength with a push through 2,800, currently holding in a range above 2,800 on an intraday basis right now. But as I've mentioned before, this is the market that likely has a ton of upside up ahead. 50%, 60% upside could be ahead for this market. It's had tremendous compression here between the 2,200 and 2,800 market structure levels. This market working in 600 point market structure levels here. So to push through 2,800 would open up 3,400, 4,000, and down the road could be as high as 4,600. So this could be a massive breakout opportunity here if this market can push through that 2800 and hold as a transitional type of move, we could be looking at a quick return back toward 3400 up above, and we have an FOMC key level up here to go fill as well. That's your July 31st FOMC key level right around 3300 and change. That could be the next key target up above. So any pullback could be a buying opportunity. 2800 breached here today. All right, that is it for now. We'll see how this plays out heading into the afternoon. Fed on deck. That could provide late day volatility. Have a fantastic rest of your session, and I'll see you in the trading room. Take care.